In business news, for the first time in 9 months, Nigeria's foreign reserves have dropped below $39 billion following the Central Bank of Nigeria's continuous withdrawal to defend the Naira. According to the report, Nigeria's external reserves stood at $38.91 billion as at 16th May 2022. The country's reserves as at Friday, January 1st, 2022, stood at $40.51 billion. But the CBN had pulled out a total of $1.59 billion since the beginning of 2022. At the last monetary policy meeting, the Apex Bank expressed optimism that the recently launched race to the $200 billion in FX repatriation policy will improve forex supply and strengthen relative exchange rate stability, a development that is yet to yield any positive results as the value of the Naira keeps declining. The last time Nigeria's reserves fell below $39 billion was Tuesday, 10th August 2021. Domestic airlines under the aegis of Airline Operators of Nigeria say the rising operational costs occasioned by aviation fuel price hikes, foreign exchange shortages, amongst others, may push the base of economic flight ticket to 100,000 naira. According to the spokesperson for local airlines, Chairman United Airlines, Mr. Obiora Okonkwo, local operators are being compelled to source foreign exchange from the parallel market at high rates due to the lack of adequate supply from the Central Bank of Nigeria via the commercial banks. Consequently, he noted an increase in the base economic flights to at least 100,000 naira might be inevitable for all domestic airline operators if the current situation persists. He maintains that meetings with the CBN are yet to yield any positive results in the provision of adequate forex, adding that operators have no joy in increasing fares, but it has become necessary for them to avoid shorting down and running out of business. Meanwhile, as the United Nations Sustainable Development Goals continue to gain momentum in Africa, the UN Global Compact Network has presented a 2-year proposed roadmap for effective business sector contributions for sustainable development in the continent. Addressing members of the business community at the CEO's Breakfast Roundtable put together by UNGC Network Nigeria, the resident coordinator for the United Nations, Mr. Matthias Shimale, maintains that African leaders need to deal with the root causes of the challenges of the continent, especially as it concerns business development. He noted that the UN Compact is working to secure the commitment of Nigerian private sector leaders to the implementation of Africa's strategy as it aligns with the principles of the SDG. A member of the board, Flora Methamfi, emphasized the need for urgent action to drive inclusive, sustainable, and resilient growth in Africa.
This is in Nigeria to revisit whether they are doing enough to protect the environment, to protect the resources, and to use resources in a more sustainable manner. We also want, in partnership, investments into initiatives that the UN runs. So an example is the Jubilee Fellowship that UNDP manages within the UN family. That's about promoting opportunities for young people.
It's more about how can private sector speak as one voice, and bring all the businesses together, partnerships. It's going to be very important what the brilliant organizations and bodies here that are already delivering on the SDG. And remember, we've only got about 8 years now to Vision 2030. So the whole idea of the Africa strategy is to help localize it so that we could see more depth, more ownership. And I like saying local problems need local solutions.
In other news, Nigeria is to support other countries in the West African sub-region with development of their insurance sector in areas of risk-based supervision. Well, this forms part of activities at the College of Insurance Supervisor of the West African Monetary Zones meetings in Abuja. Lara Folayo has the report.
A meeting of the College of Insurance Supervisors of the West African Monetary Zone, a body established to complement and implement ideas and directives of its parent body, the West Africa Supervisors Association, WAISA. The college's first meeting was held virtually in February last year, and this physical dialogue of member states will allow for rubbing minds on issues that will benefit the sector and harmonize their present and future operations.
The development of information technology and interglobal dynamic business organizations risk, the need for regional cooperation cannot be overemphasized. The International Association of Insurance Supervisors, IAIS, has provided a forum for members to share their experiences.
The entrepreneur who establishes an insurance business or company may choose to stay small, that is serving the local market.
The expansion of companies beyond their places of primary establishment and the need for their deeper cooperation and understanding forms part of the trust of the institution's existence, as it has a responsibility of helping enhance regional integration, as insurance is part of the financial sector, which is highly regulated. This is because insurance is not practiced in isolation, as factors including risk diversification, declining opportunities in the home jurisdiction, and the need for consolidation leads to expansion. Nigeria is also to share its risk-based supervision knowledge with other countries at the meeting.
The anti-money laundering body has developed 40 recommendations and 11 effective outcomes, and there is no country that can achieve any reasonable progress in its effectiveness without actively belonging or cooperating with other countries.
Insurance business evolves through desire of entrepreneur to curtail the negative effects of the risk materializing. Hence, that is why insurance is regarded as a risk transfer mechanism.
Apart from plans to develop templates for presentation of countries' reports as well as implementation of regulatory standards, the meeting also focused on sharing Nigeria's experience on risk-based approach to on-site examinations. Lara Folayo, TVC News, Abuja.
3 days of negative trades were reversed at the stock market following huge gains by many high-cap securities. Effiong Ekop reports on markets.
Trade gains by MCN Nigeria, Transcorp, First Bank Holdings and GT Holding helped the stock market to reverse previous negative trends recorded for 3 days. Price recovery shot the index of the market upward by more than a percentage point to underline trade balance for companies. Over 8 billion naira came into the market through multiple deals. Direct price gainers were Transcorp Hotels and Better Glass as they hit nearly 10% points. McNichol, Veritas Capital and Multiverse also made gains. On the downside of business were Cornwell, Eternal Oil, Prestige Assurance, Charms and Royal Exchange. Nearly 300 million units of shares were traded during the business hours. Effiong Ekop, TVC News, Lagos.
Asian stocks late today tracking steep Wall Street sell-off as investors worried about global inflation, China's zero-COVID policy and the Ukraine war, while the safe haven dollar eased. European equities market also looked set for another rough day. The pan-region Euro 50 futures fell 0.52%. German DAX futures was down 0.63%. FTSE futures 0.51%. Nasdaq futures 0.15%. S&P futures reversed earlier losses to be 0.05% higher. Overnight on Wall Street, retail giant Target Core warned of the bigger margin due to the rising cost as it reported its quarterly profit had halved. Its shares plunged 24.88%. The Nasdaq fell almost 5%, while the S&P 500 lost 4%. MSCI's broadest index of Asian Pacific shares outside Japan snapped 4 days of gains and slumped 1.8%, dragged down by a 1.5% loss for Australian resource-heavy index, a 2.1% drop in Hong Kong stocks, and a 0.3% retreat in mainland China's blue chip. Japan's Nikkei shared 1.7%. Tech giants listed in Hong Kong were hit particularly hard, with the index falling more than 3%. Tencent sank more than 6% after it reported no revenue growth in the first quarter, its worst performance since going public in 2004. Oil prices on international market rose today, recovering from earlier losses on hopes that planned easing of restrictions in Shanghai could improve fuel demand, while lingering concerns over tight global supplies outweighs fears of slower economic growth. U.S. West Texas Intermediate crude recorded a price dip of 0.06% to hit $109.50 per barrel. Brent is at $109.60, registering an upward price margin of 0.46%. Bonny Light's performance has, however, lost some steam, trading in the red territory with a price decline of 3.86% to sell at $113.60 per barrel. For the OPEC basket, crude dealers offer $117.20, recording an uptick of 3.65%.